Yo, hey everybody, this is Cruz Gamboa and I'm here with Jeff Stock. This is the B8 podcast and this is a conversation where we're going to just talk about like what's going on in each other's world. I'm going to be asking some questions. He may be asking some questions from me. The purpose here is to have fun and just to find out how Jeff and I could be growing our businesses together. So Jeff, it's so great to be here with you, man. I've been looking to record this podcast with you. I know we've been talking now for a while, and at least for me, I feel like we have a lot of alignment in the stuff that we do for our clients. So let me start by asking you, tell us a little bit of what you do and like why you're here at BA.
Yeah. So thank you, Cruz. So what I do is I have a private investment fund. And that sounds all techie, right? But what we're really about is trying to find ways to improve the world by raising capital for emerging companies or companies that are trying to benefit humanity. So basically, our fund has three different offerings. The first one is we can save you on taxes. So we have an EV charger strategy where you spend around $163,000. And you get back over $400,000 in tax incentives. So it's kind of a no-brainer. You do have to have a certain income threshold to make it work. And then my hope is that when people save that money in taxes, they'll want to deploy it into my fund, into my investments. So right now we have an investment that is Airplane Teardown for the parts, which I'll talk about. And I have different real estate partners, including my sister's company. They're building homes in Pacific Palisades where their home burned down in the fire. So, and they're really, really smart. They're using a factory build, which saves a lot in cost. And they have partners with a general contractor who's really, really talented. They make these homes absolutely beautiful. And the margins are really, really high, so we can give investors really solid returns. So that's the second one. And then the third one is I'm launching an angel investment pool. It's called the Purpose-Driven Angel Investment Pool. And we're looking for 15 companies that are aligned to benefit humanity. So these are startups, sometimes pre-seed. And the reason why I'm making a pool of them is because I wanted to invest in a lot of these companies, but each one of them individually was too risky for me. But I was thinking if there's 15 of them, then and I really believe in all of them. I think they're all going to do really well, potentially 10-fold, 20-fold in some cases, right? But they're all risky individually. But together, because of the rules of diversification and actuarial math, and I'm an actuary, it's a lot safer to invest in a pool of angel investments. So that's what I'm about.
It's actually because we before we hopped on, this is just now, it's kind of like opening it up for the public here. Like before we hopped on this podcast, we didn't really know what we were going to be talking about exactly, but you just touched on something that is like really, really important for me, at least, that I didn't really know about you, which is that you are investing in purpose-driven enterprises, companies, right? That are set to basically make the world a better place, pretty much. And that is what my company is all about, because I'm very much a purpose-driven and sort of faith-driven company. I believe that our companies are an extension of our spiritual life, our mission, right? And I see it as my responsibility and my number one job to create solutions and to create the support and create the technology that supports founders in accomplishing their mission. So there you go. We didn't really know if we had something to talk about. That is something that maybe we can go a little deeper.
We absolutely should. So tell us a little bit about what you do.
Yeah.
Cruz, tell us about how you help companies to make sure they don't run out of money. Because that's something near and dear to my heart.
Exactly. So my company is a CFO advisory and technology company, and we serve 6, 7, and 8-figure founders. And the reality is that a lot of the stuff that we do is grounded on the concept that companies need to be ready to scale before they want to scale. And I've spoken to hundreds of founders since I started my company, and also when I was at General Electric, I saw there were a lot of founders that are trying to grow their businesses. And when they think about scaling, what they really think is about growing sales. But the reality is, and I think you actually saw it in the presentation that I did today, is that sometimes growing revenue is not the best thing for a company. Because if you don't understand what is basically your cash conversion cycle and the working capital that you have associated with the current commercial structure, the terms that you give your clients, the way that your vendors, that you have to pay your vendors, if you don't understand the ins and outs that are going to result from your current operations, then you may be as well scaling a chaotic situation. And how many times have you seen companies that start scaling, then something happens, they hit a cash crisis, and then they have to scale down, they have to let people go, they have to do all of these things and sort of like start from scratch. So this happens because many of these companies didn't really understand the financials behind of their current structure, the current financial design. So this is what we're trying to bridge for the founders that we're supporting. I mean, I'm all about scaling, but I'm all about scaling sustainably. That's basically the difference. We prefer to focus on profit and cash and value creation ahead of revenues. I mean, we want to increase your revenues, but we want to use revenue as a leverage, not necessarily as the North Star for how you run your company.
Yeah, that makes a lot of sense.
Yeah.
So for me personally, if I look at it personally, so I feel like I'm ready to scale and grow, but I also have this constraint, like I don't want to run out of capital. So what would you tell someone like me who, I'm ready to, to go from a gradual incline to like a steep incline. So what should I be looking out for as a business owner?
Leverage, especially like since you're a capital driven company, right? Because you're an investment company.
Yep.
How can you leverage your capital? How can you minimize the concentration risk that you have in any one investment? And I think you're already doing that in a way. And how can you also leverage the capital that you have so that maybe you can get loans or you can get capital on top of the capital that you already have that is at a lower cost of capital to you, but it allows you to take positions. And even if those positions don't perform as well, you're going to basically exceed the rate that you have to pay your creditors. And I mean, obviously, you're probably much better suited than me to structure that. I'm sure that's part of your strategy, but that in your particular case, the word that comes to me is leverage.
Yeah. So one of the strategies I'm using, tell me if you think this is right, is I have some rental properties and I've just been selling them to cash flow the business. Eventually that's going to run out, but I've been trying to deploy those investments into different projects that will return capital when I need it. So I make sure that I always have cash flow coming in when I need to spend cash flow coming out. But it's very difficult to model that, even for an actuary.
Even for an actuary, yeah. So, did you actually look into maybe refinancing the properties before you actually sold them? Because that is another way in which you could have...
Yeah, I did look into it, and it probably would have worked better. But part of it was a time thing. Like I was tired of dealing with tenants and problems with the plumbing and
yes,
pretty much every day there was a phone call. And I had some people on speed dial to help fix it, but every day there's problems with places. So I didn't pick the nice fancy luxury condos. I picked some fixer-uppers.
Yes.
So if I were to do that strategy again, by the way, if anybody's listening, like even though it might be more profitable and it seems like it's more profitable, don't buy a bunch of low-cost foreclosure homes and try to fix them up, because you get kind of what you get. If you can get something that doesn't require a lot of maintenance, even if the returns are lower, it'll hold its value and you'll be able to sleep better at night, not having to deal with problems.
So it basically what I think effectively what you did is to you like shifted the composition of your portfolio by moving from these low cost residential properties into, what is it that you said, like other kinds of properties?
Yeah, well, so my real estate exposure now is I'm investing in different real estate projects, mostly new construction. So my sister and her firm, they're building homes in Pacific Palisades. They build beautiful homes. You can see them on my website, stockalternatives.com. And for people who want to invest in that project, the returns are very, very strong. And I've also paired it with Airplane Teardown for the parts.
Mm-hmm.
And I did that because it takes away the risk. So both of them generate enough returns on their own.
Mm-hmm.
But say the real estate market were to crash 25%, the new construction, the margins might be in that range.
Mm-hmm.
So I wanted to de-risk that. So I paired it with the Airplane Teardown for the parts. And so what they're doing is they take a plane that was originally like $50 million, say. They're going to buy it 20 years later, pretty fully depreciated. They're going to buy it for like $5 million. And then through a teardown process, they can sell those parts for over $15 million. So they can 3x the money over the course of 5 years. But then that's actually cash flow that's coming periodically, which can also be reinvested. So it ends up generating really, really strong returns. But it's because my partners in this, they know the airplanes, they know who the buyers are, what's in need, and they target airplanes where the parts are in really high demand. And a lot of times they'll even pre-sell the engine before they even bid on the plane so that they'll have a buyer lined up, and that de-risks it a lot.
I see. So do you have a mismatch of cash flows on that strategy, or do you think you're fairly mitigated?
So I think it's good because the airplane is very front loaded,
Mm-hmm.
and then the real estate is typically like 12 to 18 months per
Mm-hmm.
project. Unless you're doing a fix and flip, then it's faster. So the combination is, that's part of what I'm doing as a fund manager is I'm timing the cash flows so that people who want to get paid periodically, like once a quarter, they can get a consistent preferred return once a quarter.
Yes. And I assume you're basically you're working with a tax advisor to help you structure all of this, right?
Yeah, so that's a good question. So I do have tax partners, and I haven't put EV chargers into the fund, but I was actually talking to someone yesterday who does tiny homes. And tiny homes are like fully depreciable, full tax benefits. So I was looking into potentially trying to add those to the portfolio to offset taxes. So that when people are getting a 20% return, which, as you know, like only maybe about 10% of companies on the stock market can generate that over time. But if you could generate that after taxes, that would be even more powerful. So I'm looking at some of the real estate partners that are more tax advantaged. And then the other thing I can do for taxes, doesn't require a tax attorney, but the Airplane Teardown, when they recover their principal, that's not taxable. But once they've recovered their investment, so like for the $5 million example, they buy a plane for $5 million. The first $5 million they get back, not taxable. After that, it's ordinary income. But if I have investors that were, some of the investors are IRA investors because you can invest with a self-directed IRA, and some of them are like traditional non-IRA investors. I can give more of the tax benefits to the non-IRA, the regular investors, and then basically tax a lot to the IRA investors, but they don't have to pay the taxes. So there are some strategies around tax allocation in the K1, which can be pretty powerful. But of course, we always have to make sure that what we're doing is compliant and follows the rules.
Absolutely. So let me shift gears a little bit. Let me ask you sort of a more high level question. So where do you see your company 3 years from now?
Yep. So my goal is I want to raise $30 million a year and have that money change the world. So 3 years from now, that's just for the 1 year goal. I haven't put a goal down for 2 years or 3 years. But if you use the same goal for year one, that's raising $100 million in 3 years.
In 3 years.
And I would like to grow a certain amount as well.
Why not $1 billion?
So the way that the Reg D funds work, you can put them for up to 100 million fairly easily. I wouldn't be against growing more than that, although it needs to be a gradual. I'm not one of those people like, I'm going to follow your advice and not grow too quickly because you can grow yourself out of success. I do have some faith in the process. So if I'm supposed to grow $1 billion, then the right people are going to come into my life and help me to grow $1 billion.
Yes.
So if things are going, like, I'm not going to stop myself. If we can help the world by growing more, we're going to help the world by growing more.
Well, I'm definitely going to be holding the vision for you to find those partners. So
Sounds good.
So what is the number one outcome that you expect to accomplish? Like, what is like in say 10 years from now? Let's just do even like more futuristic stuff. Like 10 years from now, like where do you see your company creating the most impact in the world?
Yeah, that's a great question. So where is it going to impact? So I want to help, everybody who wants to raise money, who has a good mission behind it and has a fair valuation. I want to help them to be able to raise capital. So any profits I make from this, I want to reinvest it into companies that really need someone to believe in them. And I'm a numbers guy, so I can tell like if their numbers are no good. Like if I don't believe it, I'm not going to invest in it. But if I believe in the company and they're doing something that needs capital to change the world, and I'll give you an example. A company that I'm working with, that I'm raising for, and I'll have a separate podcast with them next week. But they're raising money to find a replacement for the mammogram that works on dense breasts, has less radiation, but just has a better view of the breast image. So it'll do a better job of detecting cancer. They got NIH matching funds, but they needed capital to get that match because they were only going to match the funds. So I invested in them, and I'm also now helping them raise capital.
That's awesome.
And that's a perfect example, I think, of a company that is mission driven, that they don't really even care about the money, although I'm going to make sure that they do make money. And they care about the outcome. They care about changing the world, having people live longer by diagnosing breast cancer earlier, and maybe even finding technologies that reduce or prevent breast cancer in the long run through detection. So yeah, there's so much technology out there that they just don't have the money. I'm helping another company. They have some imaging devices that can diagnose certain conditions. I'm not going to talk about the specific, but they can diagnose it in 30 minutes versus waiting a month to diagnose it. And they're trying to go into the U.S., so we're helping them with a strategy on how to enter the U.S. markets, which is, frankly, has a lot of rules to come into. But they do need some capital for that, and it'll make a difference if we can get them their funds, because they'll be able to help people to live longer and then find out they have problems before they become too big of problems.
That's amazing. So the thing that kept coming up for me is that you talked about that you're looking for companies that have a good technology or something that can be scaled or can be successful. Like, what advice do you have for people who are trying to come up with those ideas? Like what criteria should they, like, as they're thinking about the next best idea that they can work on, what is the thing that they need to be thinking about?
Yeah, what advice for someone who has an entrepreneurial idea?
Yes.
I would say, look for where there's a need, right? So if something gets you angry or sparks like some sort, like something that really bothers you, sparks a strong emotion, then you say, well, how can I solve that? And if you come up with an idea, then there's so many smart people in the world, then you need to just find the person who's going to help you make that happen. And that's one of the things that's great about board of advisors, is that you actually find the people in the room that can help you to accomplish what your goal is. They're always there, because there's so many like innovators and CEOs in the room that they know they've done it before, and they can help you. They can help you to do it if you have a good idea. So I'll give you an example of that. So one of the people who I did a podcast with last week, they had a vision to basically stop human trafficking. So how am I going to stop human trafficking? Because that's kind of a big goal. And there's a few people on board of advisors who do documentaries on that and try to help with that. But they had a completely separate idea of a company called Sinkside Billboards. Mm-hmm. So when you're washing your hands, you get to watch a little ad about whatever someone who wants to advertise to you. So when I was first looking at that, I was like, well, this isn't really purpose driven. Like, you're just one more media in your face when you're in the bathroom, right? But then when I talked to them, they said, well, we're going to use this to stop human trafficking. 1 out of 12 ads is going to be about a social cause such as that. And with that, all of a sudden I got the goosebumps. I'm like, okay, this is something I'm aligned with, and let me help them to raise money so that they can do that for the world. And they're also going to give back, a percentage of the profits for those causes as well.
That is so amazing, right? Because we're talking about the world of investments, and yet here you are just talking about what really matters is the stuff that, energizes you, that, that touches something inside of you, right? At a deeper level that is really actually hard to explain. Like, how do you explain that to someone? It's a very personal experience, but I do agree with you that like you have to follow the energy, right?
Mhm.
Like the stuff that gets you motivated, gets you energized. That's the things that you should pursue, whether it's like negatively energized or positively energized. I think both are actually fairly viable as well. But I do agree with you that that is one way to know that you're onto something big. So besides this one example that you just gave me for this investment, can you say that maybe there was something when you were thinking about like how to create this fund, something that energized you, that gave you this idea to start the fund in the first place?
Think about that. Yeah, so the idea to start the fund, originally I wanted to be a financial advisor.
Mm-hmm.
And so I'm not a financial advisor. I have all the licenses, I passed all the exams, but I'm not aligned with an advisory firm. And the reason why I stopped doing the financial advising and started the fund is most of the advisors that I knew just said, put your money in the S&P 500 and maybe a little bit in emerging markets and international and maybe into some small caps, right? But it was all stocks. And if you're older, then get some bonds or get an annuity. That's like the cookie cutter formula. And there's nothing wrong with those approaches for people who are doing that. But if you talk to a lot of wealthy people, like really wealthy people, they are not doing that. They're doing that for maybe half of their money, but for the other half of their money, they're investing in private ventures, private wealth strategies, angel investments, and then a lot of real estate. So I'm working on that other half that it really targets wealthy investors, but you don't have to be that wealthy to invest in these investments. You need to be an accredited investor. That's just what the government says is required. So you have to be able to do your own due diligence. And what they say is you need to have 200,000 in income or 1 million in net worth to be accredited. So as long as you meet that requirement, then you can invest like a wealthy individual. But what I also recommend is don't just put your money into one thing. So the reason for working with stock alternatives is if you invest in our fund, we can give you access to, probably potentially 20 investments through one investment.
Gotcha.
And then you're more diversified, it's less risky. So, if something happens like COVID or housing market crash or super high inflation, which by the way is probably going to happen, we can protect you. And it's not me protecting you as an advisor, but it's me protecting you as somebody who offers investments that solve your need. That's good.
Yeah. So look, I think this has been a great conversation. I think I learned more about you in this conversation.
That's what it's about, right?
That's what it's all about.
Yeah.
And then just tying it back to the thing that we said before we started the podcast, which is community is the key. This is what we're all here at BA. This is what we are. These are the relationships that we're nurturing. We're growing together. We're holding each other accountable to the things that we need to do, having the tough conversations when we have to. And this is how we grow, and this is how we do it. So I really thank you for showing up and for being here with me on the show. Thank you.
Great. Thank you, Cruz.